partnership basis and how it's calculated. It's one of those things that it really needs to be maintained almost on a day-to-day basis. Because, you know, if any partner leaves the partnership, exits, or decides to sell their partnership share either back to the partnership or to somebody else, they need to know what their basis is in the partnership. But there are, even if it's not maintained continuously on a kind of a day-to-day basis, it has to be recorded during any of these times. So if in the years when a partnership has a loss, we need to know what the basis is. Remember that basis can't go below 0. Losses reduce basis. So if a loss reduces our basis below 0, then we're going to have to make an adjustment to that additional loss amount because it can't go below 0. So anytime that the partnership has a loss, we need to know what each partner's basis is, or each partner needs to know what their basis is. Liquidation or disposition of a partner's interest. So liquidation means they're selling essentially the partnership is buying them out. The partnership is going to retain all of that partnership percentage that the other partner owned. And so maybe it was a partnership with 3 people and then it's down to 2 people. So the partnership is buying out the third partner. That would be a liquidation. Disposition is where the partner sells their share to somebody else, to some outsider. So we had started with 3 partners, and we still have 3 partners because one of the partners sold their share to somebody else. Or in a year when a partner receives what's called a non-liquidating distribution. Now we're going to talk a little bit more about distributions in the next section. Here, non-liquidating distribution means the partner is getting something out of the partnership, some sort of withdrawal. Usually it's cash, but sometimes it could be property as well. So the partner receives a distribution, but they still own. It doesn't change their ownership. They're just getting back. Think of it, again, your bank account, you're making a withdrawal from your bank account. So that's sort of what a distribution is. But in order to make a withdrawal from your bank account, you gotta have money in your bank account. So the basis is that money in the bank account. If there's not enough there, then we've got a problem because it can't go below 0. So these 3 times are when it is required to know what the basis is, but it's always a good idea to keep it updated anyway. Now, things that increase and decrease basis. First off, so we're going to go through that list of things that increase and decrease basis. We saw kind of a preview of that on Tuesday. Those items they reduce basis, or they affect basis in a certain order. So you've got to go through them, you've got to apply them in a particular order. First, we're going to increase or decrease basis by all adjustments except for losses. So everything except for losses. So income, so ordinary income, capital gains, dividends, anything that, or as well, any deductions. So 179 expense, that sort of thing. So all adjustments except for losses. Next, we're going to reduce the basis by money distributed. So distributions, right? Those non-liquidating distributions that I just talked about, in addition to any release of liability. So if a partner is no longer liable for a liability of the partnership, then that as well would decrease the partner's basis. So that would be second in line. Third is a reduction by the basis of any property distributed. So that's different from money distributed. Here we're talking about cash. Here we're talking about anything other than cash that's being distributed by the partnership to the partner. Okay, so in that order, that's the order that we have to take in order to adjust that, our basis. Now, here's what we have, and I'm going to write this down in an abbreviated version so we've got it handy. Okay, so remember, we already talked about where we start out with regard to basis when we form our partnership. Right? We went through all that, all the contributions that were made, if it was cash, or if it was property, or if it was services. We have our starting point, right? So our starting basis is first, beginning. And then we're going to add any additional contributions that we make, right? So maybe we contributed some cash at the beginning, but then some along the way, we're going to contribute some more cash. So, and you can do that. Partners can do that at any point. They don't have to just contribute at the beginning, at the formation of a partnership. They can do it at any point. And oftentimes do, because especially in the early years of businesses, they need cash. It's hard for them to generate it. So, any additional contributions. That will increase basis. Plus ordinary income. That box 1 on the K1, any ordinary income. And this is on a per partner basis, right? So whatever the partner's share of that ordinary income is. Plus, separately stated, income and gains. So rental income, long-term capital gains, short-term capital gains, all of that stuff. Plus the partner's share of liabilities. And we did that calculation where we had one of the partners contributed a building that had a liability attached to it, so that liability was spread out amongst the partners, right? The 25, 25, 25. So that increases basis. Then we're going to have some subtractions. So basis of property distributed. So basis distributions, I'm just going to call them distributions. So if it's cash, $20,000, the basis of $20,000 is $20,000. If a piece of equipment is distributed, whatever the basis was in the hands of the partnership is going to be the amount of the distribution to the partner. So if it has a basis of $5,000, then that would act like a $5,000 distribution to the partner. Then, and again, they say these are you can't go below 0 with these. Your subtractions can't bring you below 0. Ordinary loss. Any ordinary losses in that year, going to subtract. Any separately stated losses or expense items. Yeah. So if we had a capital loss, that would be a loss item that would then reduce our basis. And last, the partner's share of partner's release of liabilities. So the exact opposite of this one here. Release. So if they're no longer liable for those liabilities, right? So these are the things that affect basis. So after all this, ending basis, but this is not below 0. Can't go below 0. Right? So these are the things that would affect our basis. Remember, we're going to use basis at the time that we have any, we need to know it when we have a loss. So those ordinary losses reduce basis. We need to, anytime we have one of those, we've got to know what our basis is. Liquidation or disposition of a partner's interest. And in the year that a non-liquidating distribution is distributed. So that where it says basis of distributions, anytime that happens, anytime that next one, the ordinary losses happen as well. But it's got to be in this order. So let's take a look at this. So we've got Allison. She has a basis of $5,000 in a partnership at the beginning of the year. And again, this is like continuously recorded, right? So she starts out with a $5,000 basis in her partnership, right here. She receives $3,000 in cash distributions, all right? 3,000 here, that's a subtraction. Her distributive share of income is $2,500. That's a plus. It's going to be a plus to her basis. And she receives a land distribution with a basis of $4,000. All right, so again, another distribution, but this is a land distribution. Okay, so calculation. Start with the 5,000. We're going to add that income, but the cash and the land reduce her basis to $500. So if she were to sell her partnership share at the beginning of the year for $10,000, she would have a gain of $5,000, right? Because her basis at the beginning of the year was $5,000. If she were to sell her partnership share at the end of the year for $10,000, she would have a gain of $9,500 because her basis is $500. Okay. So let's see. There's another example here. Okay, so there is the K1. I noticed this last night. This K1 is not very good. The K1 on the previous section. These are items that are supposed to have come from that K1. If you compare it to the K1, you'll notice that they're not exactly the same. There is no section 179 expense on the K1 in the previous section. The short-term capital gains is $400 in the previous section. The share of dividends is $1,100, not $1,110. The 1231 gain is $110. So we'll just pretend that this is what's on the K1 here. All right, so here we've got Luling Wu partnership basis. At the beginning, it was $22,000. Share of ordinary income, which is on that one actually is on the K1 properly in that first box, $60,540. So share of income, right there, it's plus. Share of dividends, all right, so that's another separately stated income item, so that's a plus. Share of short-term capital gains, long-term capital gains, again, those are separately stated income items, so those would be added. Share of net 1231 gain, that's another separately stated item. Charitable contributions, which, by the way, that is on the K1 in the wrong spot. It's under income, it should be under deductions. So this means that the partnership made some charitable contributions, and this partner's share of those is $2,600. Now, Luling may or may not itemize their deductions. They may not get to deduct that. If they don't itemize their deductions, then, and I mean, if it was a cash contribution, then they might get to $300 of it off of the front of the return, but they don't itemize, they don't get that. However, this is still, even though they don't get a tax benefit from it, even if they don't get a tax benefit from it, they still have to reduce their basis. So even items that don't affect them tax-wise, if any of these items don't really have any effect on them, on their individual tax return, they still have to reduce their basis or increase their basis by it. So $2,600, that's a separately stated expense here. Section 179 expense, that's a separately stated expense as well. So ending balance, with all of that in mind, $71,595. So again, if he sold it at the beginning of the year, would have had a, what, $78,000 gain. If he sold it for $100,000, $78,000 gain. Sold it for $100,000 at the end of the year, there would be a, what is this, $18,405 gain because of all of these basis adjustments that occurred during the year. All right, now you notice, and I will go back to the K1 just to show you, because there were some guaranteed payments listed on there. This is the K1 that we're looking at. So there's the 6540. There is a guaranteed payment here as well of 42,000. I know it's kind of hard to. There you go. So ordinary business income, that increases basis. Guaranteed payment. Now, this one actually has no effect on basis. It's in and out because it is an expense. The guaranteed payment is an expense. It reduced our ordinary business income, but it's also an income item. So as an expense, it would be subtracted. Did I get that right? Well, no, let's see. So there's the distribution would reduce the, the distribution would reduce the basis because it's money that's being distributed, but at the same time, they're paying tax on it. They have to pay tax on it, so it acts like ordinary income as well. So it would be plus, there's plus side, there's minus side, it cancels itself out. So we don't include guaranteed payments in those basis calculations. So you can see the rest of this, ordinary dividends. See, it was 1,100, 400. I guess it was 150, not 100, 105. Here's the charitable contribution that actually should be down here, not under other income. Had a distribution of 26,000. I don't think they even, did they include that distribution in the calculation? I can't recall. No, they didn't even include the distribution in this calculation. There should be a 26,000. That distribution should also reduce his basis. All right. So liabilities, you can see we've got up here partner share of liabilities increases basis, and release of liabilities will decrease basis. So that's usually the last thing that we consider when we're calculating basis, and so it's not oftentimes it's not really included in the calculation unless you have to include it in order to increase the basis because we've gone below zero. Okay. So an example with if their ending basis, so this is the same person here, Lily. responsible for those liabilities, which means it adds to his basis, which is what they've done down here. So 71,595 from here. If we include the liabilities, we're going to add those liabilities because that's a plus. So his total basis, including the liabilities, is 140,895. All right. Questions about that? Just keep this. The couple things that you need to keep in mind here: the order with which these items are applied, and then also what types of items from that K1 affect partner basis. All right. No questions?